Welcome to the Crypto Sphere. This is Cryptogenic coming at you. Today is Monday, January 9th at 4:25 p.m. here in Northern California. We're going to jump right into these charts. What I'm going to show you today is that there are two scenarios. Nobody knows for 100% accuracy which one is going to play out. I can tell you which one I think is going to play out. One is bullish and the other is bearish. Now, of course, that is self-evident. There's always a bullish and a bearish scenario no matter what's going on in the market. However, what is not always self-evident is what to do in order to profit either way. So what will be the prerequisites for determining which scenario it is to be, and how are we going to trade this? That's what we're focusing on in the Cryptogenic Patreon community. Is we are actively trading Ethereum right now. So check that out at patreon.com/cryptogenic. But without further ado, let's jump into this chart now, and let's take a look. We're gonna zoom in, or we're gonna zoom out. We're gonna start zoomed way in, and then we're gonna zoom out to kind of get a fuller picture. This is the 5-minute chart, okay? And what we're seeing in the 5-minute chart is we ranged, we broke above the range, and the range became support. We broke out again, formed a new range, and now we've broken down to test the bottom of this. But this is kind of a little bit of a falling wedge or a falling channel. We're now breaking out above that, which indicates that we might be revving up to take another swing to try to break above this level here at 1344. I don't think this rally is over. I think it's going to break higher, but we shall see. Bottomed out in the RSI and started to recover on the 5-minute chart. We're going to move from the 5-minute chart to the 4-hour chart. And here's what we see on the 4-hour chart, that this level of resistance goes all the way back here. This is a 4-hour chart, so this is November 29th. And you see how we kept hitting this kind of region of resistance again and again and again and again and again. And then we capitulated beneath it, but we made this ascending narrowing wedge, which typically is bearish. We broke bullish above it, and the measured move took us up to 1322. We broke above 1322, and we hit resistance at the top of this move here, okay? So that's kind of like a midterm picture, like a medium-term picture of what has happened. But let's zoom out a little bit more and take a look at the daily chart. What we can see is that the candle pattern on the daily is clearly a bear pennant, okay? Another ascending narrowing wedge. Now remember, on the 4-hour, we were making an ascending narrowing wedge, and this was a clear bear pennant too, but we broke bullish above it. So the key thing to remember is that when you identify a candle pattern, identifying a candle pattern does not mean that you have determined with absolute certainty what's coming next, because all candle patterns do is indicate probabilities, not certainties, okay? So, once again, we can break bullish out of this ascending narrowing wedge just like we did on the 4-hour. So the first possibility was that we were going to hit the top of this ascending narrowing wedge, get rejected, and break down. That didn't happen. Next possibility is that we're going to hit the top of this ascending narrowing wedge and break down. And the measured move from the breakdown of this wedge would take us down to $963 if we break down here. However, if we break bullish, the first line of resistance is going to be here at the 200-day moving average, okay? But, and by the way, we've got a strong level of resistance here that goes all the way back to September, okay? So this is an even stronger level of resistance that we saw here on the 4-hour, because this one is more temporary. On the daily chart, this goes back to September, so it's a much more long-term kind of region. So it's, we hit this area here, we broke down, we hit it again, we broke down, now we're hitting it again. If we break down here again, this would be a triple tap, basically a bearish triple touch. Like we've touched it 3 times, and if we break down here, the odds are we're breaking down from here. And of course, there'll be levels of support on the way down, but this should take us down to 963. Now, the difference between this tap in this region is that when we hit this region here, the RSI was still in the middle, which meant on the daily chart, the RSI still had room to kind of recover a little bit and take another swat at the top. But now we're getting into the oversold territory. Overbought territory. And so once the RSI on the daily chart hits the overbought territory, you're starting to get to the end of that particular move on the daily. Doesn't mean that we can't get another couple of pumps here before we finally top out here. It simply means that, it'll be a little bit more difficult. It'll be a lot more difficult, actually, to get a real sustainable breakout when you're already at the top of the momentum in the RSI on the daily chart. But if we zoom out to the weekly, this gives us really the clearest picture of the two possibilities of what's to come. Number one, huge bear pennant here. Okay, huge bear pennant here that goes all the way back to really April of 2022. So we've been forming this pattern for almost a year. I mean, we hit the bottom of it in June, and we got lower highs and lower lows, but it's narrowing. So it's a descending narrowing wedge. Well, it's a bear flag. It's both us. It's like it's a symmetric triangle, but it's entered in from above, so it's more like a bear pennant. It's kind of ascending. It could be descending. It's really hard to say. This is why both scenarios come into play, because what this is somewhat subjective. That being the case, the resistance is actually right now for this particular week, the resistance is at 1444. If we break bullish above 1444 and we come back and retest, and when I'm talking about breaking bullish, I don't mean hitting 1445. Like, literally, we can come all the way up here and still break back down and break down bearish. It happens all the time because anyone who knows how to chart even a little bit will see this pattern here. And so all the bears have to do is to fake us out, is to let the bulls push it up a little bit above this chart, and everybody thinks, great, it's a breakout, it's a breakout. And then the bears, if they have the strength to do so, they'll just crash it to the ground. So don't think that just because you get one candle close above, it invalidates the pattern. It doesn't. But if you get a breakout that's maybe, a couple of days that comes back down, retests here and bounces, if we get a bounce here, then that's a signal that this thing is taking off. So if we do break out of here, what I'd be doing is probably setting a buy order right at about this line and just waiting for the retest. And if we get the retest there, I'll set a stop loss slightly beneath it, and then the goal would be to ride it all the way up to 3,000. However, what I'm going to be doing is setting a short around here in the anticipation of rejection, because I still think that the fact that we entered in from above makes this a bear pennant. And I still think that the likelihood is bearish, that we come up here, we test this line, and then we break down, right? So I'm still expecting a breakdown to this line, somewhere in this region down here. That's what I'm expecting. However, I'm prepared for whichever direction it turns. Once again, technical analysis is a combination of an art and a science. There are scientific components to it, but there's also artistic components to it. And it does not give us certainty. It gives us probability. Looking at this chart, there's a higher probability that we're going to break down bearish and the market is going to tumble in the next month or so. However, we're going to play this thing as it goes. And it could fake us all out. It could break out. You think it's going up here and then all of a sudden crash all the way down here. If it breaks out, we'll have to reevaluate along the way. But this is what it looks like to me at this point. And this is what we're seeking to capitalize on in my trading group. There's a lot of positive energy there. So if you're looking for some folks to trade with, check us out. At the silver level, the $19 level, you get all of the trading calls and the connection with the community and the weekly Zoom call and everything. So be sure and check that out. All right, folks, thanks so much for watching. Do me a favor and hit the like button. Subscribe to this channel if you haven't done so already. Leave me a comment. But above all, number two, make sure that you know that this is not financial advice, that I'm not a financial advisor. But above all, make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.